Okay, this is the morning report for Tuesday, July the 7th. Let's take a look at the ES very quickly. This is the formation that has the least number of lines. Notice this clear region here at 2077.75. This is a rejection zone. 1, 2, 3 times rejected. First time it rejected, we had the low. Second time it rejected, we had a lower low. Third time it rejected, we should have a higher low. Somewhere around the weekly pivot is my guess for what it is that we might have a look at. What does momentum tell us at this juncture? Well, it's positive from a fast SMI perspective, moving upward here, and mildly positive from a slow SMI perspective. We have these both sloping upward, far apart though, so that always means that there is a pullback into a support region. The first line in the sand I imagine to be somewhere around 2062. It's a big deal. Below that, 2051. All right, those are very wide ranges for me to discuss intraday, but we've got to put a wide angle lens on this so that we can keep our eyes abreast in the real fashion of what's going on in the charts. If we hold the 2062 area, which we might, it's very jagged, we might end up holding this region. If we do hold it, we've got to let it resolve because of the storyline being so mixed. Negative slope on the 50 of the 4-hour, sideways action on this 10. And then if we go to the daily, we can see the chart clearly rejecting that 10 simple moving average right there. The breakdown, the retest, if we were looking at this on a 5-minute chart, we would short it, right? We would short it directly into support. And that is exactly what it is that I believe this chart is in the business of doing right now. That certainly is my general thought right there. And sometimes looking at the wide angle lens is going to give us a better idea of the proper trade than the tight lens. All right, let me make this number 2062. And then we'll put something here also at 2047. Let's make this a 4-hour for now. $20.47.75, and then we know this 2062 is also fairly important at this particular juncture. So that's really what we are looking at. What's the best trade? The best trade is going to be the rejection off 2070 to 2071. That's going to be the ideal space for us. A little bit of downside momentum overall in terms of slope. Upside momentum on the 4-hour, but that's just a measure of what we just went through. And let's go down all the way to the 30-minute chart. What that gives me a good understanding of is, isn't this nice? Look at this. This really, it's just, ever since the open of the European markets, the chart has just really drifted off. Let's do one wave. Let's measure this wave. Yeah, see, that's pulling in that 2062 area. Here's the very interesting thing. If we pop up into prior resistance, which looks to be about 2072, interesting, we should have some sort of rejection event right there in the region. Okay, what is the overall slope of everything? It is negative. We have negative drift, definitely. Bounces going to get sold, but the overall momentum is down. All right, here's the problem with a formation like this. When the fast and slow SMI are very far apart, there is usually some sort of turning point into the next formation that we're looking for. Remember, there are really two types of events that we look at when we trade. The first is a turning point. That's the bounce off of support or the rejection of prior resistance. Those are our turning points. The second type of trade we take is a continuation trade that comes after the fact of something like this. So the big thing for us to pay attention to is if I'm looking at an after the fact event, where is the chart possibly going to come into? And if my after the fact event, meaning I don't catch the turning point, instead I'm at a space of continuation, what is it that I'm supposed to collide into, and is there room for follow through on the space? And when you've got significant support sitting right underneath you, you have to anticipate that you do not, particularly if you're looking at form. And this form is giving us a low, a high, a higher low, a higher high, a higher low. You get the drift? So this should be a higher low, but the overall formation is suggesting a rotation of that event. Why? Because we're looking at a little bit of technical divergence. When these guys are far apart, gives us the rotation event also. So there are a number of things pointing to the fact that if we can hold this area, right, which was a new Globex low as we come into the open, it should move away from that Globex event. And so this is an essential turning point. But the turning point is likely to come into a law of diminishing returns because momentum has so shifted into the space. And so there's a very complex little environment here, but the bottom line is we're thinking about a short coming into a lower high here. Could you take the long off the bounce? Yes, you can. The overall momentum of the chart is up. You know that what you're expected to see is something into resistance, however, and that is the most important thing to consider. Don't forget about the fact that this chart could have general continuation. 5-minute formation, very negative, very, very negative. And so it could bounce easily into a congestion zone and not come up into that 2071, 2072 area, but instead collide at 2067 and then roll over. So keep your eyes out for that sort of thing. Momentum still extremely negative, could drop off into the space. Could you take a short underneath this congestion 2064? Yes, but you would fall into support at 2062 most likely. Let's take a look at the TF first in this very noisy patch, and then we're going to shift it to the smaller group of lines that we are looking at. Let me, and then let's save this. All right. So now we are looking at, again, another rejection zone. Let's take a look at it on the daily. Daily chart gives us this rejection zone. Look at how many times it's tested it. 1, 2, 3, 4. Underneath the 10, underneath the 50. Very sideways, patchy. Downside drift. These guys are pretty far apart. The downside drift should give us a higher low. I'm seeing that in a lot of charts, that terminal zone for the low space, potentially 1238.50. If we lose that area, we've got really big problems up ahead in terms of downside momentum. 1242.70 could be anywhere between 1242.70 and 1240.70. We've got ourselves some sort of hold likely there, but this formation here is what's telling me I suspect we've got very patchy price action events, some things that are not very pretty in the long run. What do we have? Both of these upward sloping, got it right here into resistance. Notice that resistance event rolling over really fast. SMI not doing a ton right there. We'll see it really showing up here in the 30-minute chart. But again, exact same formation as the ES, wide angles between them. So we know a bounce zone is on the horizon. Should we bounce off of the Globex low? Remember the rule, if we come into the low at the open, we will accelerate away from it in one direction or another. Use momentum to tell you which way that is. For sure, that's going to help you. That being said, what do we have here? Could be a bounce zone, very steep slope, nothing really telling us that that's going to do that. So that would be a little risky. It'd be much better to take the low at this formation. In essence, because the chart has all kinds of negative drift, and there's really very little to tell you that the chart is going to bounce. And so it's legitimate to take that low. It's legitimate to take that low and have it take the short below the low, at 1245 and watch it come into the next region of support. If it bounces hard, then you know that there's trouble. But with the slope down, with everything moving down, there is a very solid likelihood that you can reach into these lower levels. Don't count it out. Is it a trade I would take? No. Because as I rotate down in a continuation, I am going to look for smaller cycles that will allow me to reduce my risk. That being said, when every single indicator is pointing downside, the chart has a strong likelihood of downside continuation. And if it bounces, it's going to bounce into a lower high and then come back and retest that level. So there's a lot of continuation opportunity here for a short in both these charts, and they are entirely valid. The shorts here are entirely valid, and we're watching them come in. Let's just do oil since it's in the sequence here. Oil, massive move yesterday. Significant support regions broken overall. Let's go to the daily on this one, right? This was a strong support level. I am going to shift it down into the bottom of the noise, but still a very strong support level that got broken. And now it's really trying to stabilize in the space. What's the form? The form tells us that this chart's a mess. And if we choose the wider angle here at 50.07 for this point, all the way up to 63.58. $3.51 on the shift. 59.40, 351. That's well below those levels. So it's moved well past this range, almost a vertical drop, really. Very, very nasty. What's the story here behind this? Does oil really, should it be impacted this way? A lot of people are talking about the boost of the price in the dollar affecting that. Whatever the problem, this is very, very close to a bounce zone. Levels are extremely oversold. 4-hour levels, very, very, very oversold. Look at the first bounce with no heat, right? It's got no traction on it whatsoever. Lost it, gave us a new low. So what do we expect? Another bounce that should do the same thing. This chart is in a very it's just in a really dangerous space. It's in a space that could go either way. What do we have? Momentum drift for sure. But what we have to see when we see this drift, it's the reason that we need to pay attention to price above momentum. When we see drift, we must see price action accompanying that formation. And see, we've got this move and that move. So momentum tells us that there's something coming to the upside. Is this an aggressive buy point? Yes, it could be. But we're under the 10 on the 30-minute. And when you're under the 10 on the 30-minute and under the 50 on the 30-minute, and you're in negative trending territory, any kind of bounce is going to cause a reversal event. And so until price gives us the go-ahead, we cannot think about taking this chart long. If you pick the bottom here, you will have yourself potentially a fair thing at a short, but this is a very messy patch, folks, and I would just say, listen, just watch for the region. Watch it get up and over that 10. Let it retest it. Let it mess around on its own and look for the high probability event. Let's take a look at the NQs. The NQs also same sort of formation into the gap, not being able to fill it, rejecting this region pretty much on the nose, coming back into what is this support. We've got a little bit of upside drift, These guys are far apart, so we know we've got that pullback into support. Let's take a look at this on a daily like we have with the others. Doesn't really quite look like the others, but it's clear to me that if it loses this 44.15 area, it's got itself some more downside momentum, most definitely into likely 44.07 and then 43.97. The chart should hold 43.89. That should be our whole point. If it loses that, it will retest it, but then, it's very likely that it loses that level. Very, very, very likely, actually. So what are we looking at now? 30-minute chart underneath the 50 on the 30, underneath the 10 on the 30. Remember, when we have only one indicator, that's the 50, pointing to upside momentum, we cannot trade in that direction and expect it not to go against us. It could be that it's the right trade, but we can't expect it not to go against us because we have a downward sloping slow SMI and a downward sloping fast SMI and a downward sloping 10. If we've got all of those downward sloping and we only have this one upside 50, we cannot anticipate that coming in here and picking it up at the 50 is going to be the right thing to do. It's not. You need to watch it retest the 50 and reestablish form so that your momentum slope gives you the appropriate direction. That's how you know you've got yourself a better trade from a probability perspective. All right, did we roll a contract in the CL? We did not, did we? August, yeah, still August. All right, looking at the 5-minute, we're going to see all that sideways action. It is pushing us up into resistance from a form perspective. But again, it is into resistance, and the resistance seems fairly solid at this juncture. If you pick the bottom here, it is going to be a messy, sloppy trade for you, and it's likely to be a trade in the wrong direction overall. The drift should be into resistance. That resistance should give way to more selling. That's approximately what it is that we ought to see here in large form. It's mixed, and so that means that my trading action is going to be very labored, as it were. I don't even know what I'm seeing here. Hang on 2 seconds. All right. Okay, let's go to this. Really quickly, I want to talk to you about this. In the blog, it says, this is Baidu. In the blog, it said, hey, listen, possible ABCD. Here it is. This is what we're looking at, the ABCD pattern. It's dropping off. This formation has a termination zone at 178.47. It is extremely oversold, and so it should give you a bounce. That bounce should be into resistance and a continuation downward. But here's what I want to show you. Why is it that it is important for price to tell you what you are going to do rather than divergent momentum? Look at this. We had a move. Raining like cats and dogs here. We had a move lower high. All right? Momentum. Higher high. Momentum here about the same, maybe a little bit less, right? Neutral zone action. Here's the thing you have to see. Fast SMI definitely giving us upside projections. The distance between these two guys is always a problem. When they are far apart from each other, they will do what is necessary to come back together. Hence, the likelihood that we are setting up for a bounce here because these guys are a little bit far apart in this form. Could they be a little further? Could they move back a little bit more before the bounce? But yes, there should be some kind of bounce action here. Here's the thing. When I started talking about looking at Baidu, I said, hey, listen, gotta look at Baidu, see where it's holding from the support perspective. It could very nicely be a bounce that held. Look at what happened. If you don't wait for price to tell you you're going in the right direction, right? It's even got positive divergence here. if you don't go, excuse me, that's negative divergence there. It's positive divergence here. If you don't wait for price to tell you you're doing the right thing, you are going to get caught on the wrong side of the trade. So, although you have divergent momentum whenever you have it, it is important that price action does what it's supposed to. Here in this case, this tells me if I lose the low here, I've got lower lows ahead. I've got 178.79 and so on and so forth. So, that being said, pay attention to the combination of divergence and support slash resistance, because if they do not tell the same story, you're going to have yourself a broken trade. Here, Apple, same noise, breaking a little bit out of this wedge. If I pull the wedge down, it's just broken it and holding the edge. Now, here's the thing. Overall, this thing is very, very sideways. Very sideways. Something's about to happen. It's got a little squeeze action event. It seems to be drifting to the upside from a momentum perspective, but it's got to pop out and pull back and hold the region here to get yourself a good trade. That's what I'd be looking at on the 4-hour because this chart is so messy. You want to make sure that it pops up and holds that level in order to take the trade in one direction or another. All right, taking a look at Netflix. Netflix had a nice tidy bounce. It's back inside of its ranges, notice. Solid momentum pushing up. Slow SMI still in negative trending territory. That tells me I can come back here. Listen, if it comes back here and this fast SMI is still punching upward or it's still in positive trending territory, this is going to be a very nice buy zone for this chart. It really is. From a longer term perspective, it should hold that space. Now, that being said, I expect it to come back into this area. That's about a $10 move. Spreads are a little wide, volume's a little thin. This entire week, a lot of people vacationing, and so that's going to give us lighter volume from a big picture perspective. All right, Tesla. Take a look at Tesla. We've got still an upside form, still a breakdown event. Look at this sideways action. Momentum is still high. So the breakdown action should only be into support. So here's my thought. If it loses 273, it's going to come into a lower measure of support, down around 269.70, but that should bounce from that perspective. The chart should give us motion that we can trade to the upside as it comes into support. Now, can you trade it down into the support regions? Of course. You've got a negative 50, you've got a negative 10, you've got a negative 20, and both your SMIs are in negative trending territory. That gives you a continuation formation down into your support regions. Taking a look at Facebook, we've got a 4-hour chart here. What do we have? Could be a bear flag. This could be another ABCD pattern building right here in Facebook. Let me add that drawing. See what we get. Look at the negative drift on that slow SMI. It just is not lifting with the price point. The squeeze here and 2, 3 upward trending moving averages are going to make shorting extremely difficult above these lines. If they lose the line and retest, which they should, At the failed retest event around 87.50 to 87.20 is where the short action is going to look best. Else, if it comes into this 87.20 and continues to hold, the chart should move sideways and then continue to the upside. Very mixed momentum events here. Really fairly mixed momentum events. So tough to say, other than the fact that it seems extremely reasonable that it's going to come back into the support area. I do not know if it's going to fail it, retest and hold it, or fail it, retest and fail it again. For Yahoo, boy, Baba is really getting kicked around. And of course, it's because of what's going on in China. That should have occurred to me early in the game with this one drifting downward. But fell through the cracks right there. Okay, so what are we looking at with Yahoo? Trending, lower levels, right? This is, of course, a breakdown. 38.38 was yesterday's, close. 38.46, excuse me, was yesterday's close. This, of course, drifting down. Listen, these are the spaces that we get in trouble as technical momentum players because we get this idea that if we have continued downside momentum and all of a sudden we start seeing a little bit of technical divergence, that somehow we're going to turn around. Listen, if we break a low, it means we're headed lower, right? Look for the next region of support and work on that. This is sitting here, right here, but look at this. 4-hour chart absolutely drifting downward. Nothing really telling us that we've got any kind of upside momentum. And when we get into the 30-minute chart, it's doing the exact same thing. We're under the 10, we're under the 20, we're under the 50, we're under mainline support, and we have this very negative momentum sitting here. Is it divergent? Yes, but to be divergent and for you to take a trade, you must see it bounce and retest to reestablish a new form. And that new form could be positive divergence on a double bottom or a higher low that has positive momentum attached to it. Other than that, you're going to be sitting in the wrong space. Look at the break of 2062 in the ES. Very negative momentum. Very, very negative momentum. All right. So, what do you keep your eyes on in terms of the chart? Listen, our longs, we picked them in spaces that were really very nice. The one big that I had was seeing that AEM did not get filled, missed by a few pennies on the secondary ad. And so, there's just nothing that you can do about that. Our long in SPG also doing very nicely. So these are things that we picked at very solid ranges. This SPG should be doing very, very well. As it continues, we got out of Cena too early. Unfortunately, that's a bit of a drag, so we'll be watching for that one to bounce into our lower level of resistance. Here's the thing, folks. There's a theory, and it's certainly not proven, but that's what they built the movie San Andreas on, this little premise of predictability. There's a theory that prior to large quakes, seismic activity increases in certain types of patterns that prove out that a bigger shake is coming. And so here we are looking at this non-event country, really, and I'm not talking about the fact that the Greeks don't matter. I have Greek relatives, they certainly matter. I'm talking about the Greek economic situation. So if we take a look at what's happening here, we think to ourselves, wow, this Greek event doesn't feel that big. And we've got this big, or we see these pullbacks that just continue to not be able to capture and recapture. Plus, we've got this stuff going on in the Shanghai index, and we've got all sorts of military unrest that's not getting any airplay now because it's all about the Greek euro and the Greek eurozone business. We've got Iran coming into a space where they are going to put more oil online that might affect other things. And there are a lot of these other little countries that are just on the precipice of whatever, and they're still having money pumped into them being part of the Eurozone. And so all of a sudden, the charts are beginning to look like little pockets of seismic activity. Nothing big, just these tiny little pockets. And we've got, I don't mean to sound like a broken record, but we have got to realize that in the grand scheme, oh my system is very slow. In the grand scheme of things, we are sitting in a region that is very, very important to these charts. This gigantic expansion that we've been looking at, and we'll look at this on a monthly space so you can see the big picture. This gigantic expansion is really extremely unusual, right? And if we were to look at this formation, could it absolutely run up to 200? Of course. We see this all the time. And it could be that we only pull into 127.2, go back to 1618, and then head all the way up to 200. That's going to be great. Here's the rub. Look at the momentum drift. And remember, what we need to see for momentum drift is a break of price. And here we are at the end of June, having the break of price, closing that area, July sitting right at that measure. We have got to think about how very, very important this line of 2055 is to the chart. It is very important. And it's important that if it breaks, it recovers quickly. Because if it doesn't, there's going to be a problem on the horizon in terms of the charts having a significant number of pullbacks. Full disclosure, I am no longer adding to my intermediate portfolios, right? My portfolios that have a hold from 4 months to 2 years, I am not adding to. Long-term portfolios, those are moving just the normal way they should, right? These guys that have a lot more rotation, not adding to them, looking for them to hold, stabilize. If they move ahead, great. And if they start pulling back, I'm just going to take my profits where it is that I suspect they're going to hold, right? I'm going to take profits If they don't hold in those spaces and come back to retest them, they're going to be gone. Weekly divergence also existing, slow SMI still very high. So do we have a chance of popping? Yes, this formation right here tells me that pullbacks will be bought. And until that formation disappears, I really cannot think about doing anything from a shorting perspective here. This is just a space for you to keep your eyes open, because we do need to have open eyes. We can't be running punch drunk and buying. All right? Just not something wise. Okay, that's the morning report.